Governing Council. It will take into account this sort of three steps approach that I have just mentioned: assessment of the risk of fragmentation, second, the evaluation of the eligibility criteria, and third, what I call the proportionality yardstick that we apply to any use of any tools. And obviously, this decision to activate the TPI, provided these three steps are validated in the mechanism, will depend on the severity of the risk and will also depend on the success of the operation. So it is not an instrument that is intended for an endless period of time. And it may well be, depending on the severity, depending on the success, that the use of TPI is discontinued, either because it has been completely successful or because it has not been operative and the diagnosis that was initially concluded by the Governing Council was misguided and requires the use of another tool. I tried to be brief so that you have the floor.
No, I read the statement after your last meeting, explaining this element that you summarized us now. But my point is, if the country where you identify problems for the transmission of monetary policy is a country where the inflation rate is higher than the average, it's clear that if you buy more debt from that country, you will contribute to more inflation. So in the design of the instrument, there is a clear trade-off between inflation and fragmentation, because the context to implement this tool is completely different from the context in the pandemic crisis, where we faced a deflation risk. Now we are in an inflation risk, and with inflation, you will not be able to buy debt from a country where the country who will be suffering problems for the transmission of the monetary policy, because in that context you will contribute to increase the inflation just in that market. So in the design there is a clear trade-off between fragmentation and inflation that is not solved. And I think that we need to think about it more.
Well, in any decision to implement the TPI, we will take into account the macroeconomic situation and the actual inflation situation, as well as the inflation outlook, in order to properly design the use of TPI, the volume of purchases that would take place, in order to address something that is not in the ordinary course of business, because it is disorderly, because it is unwarranted, because it's a market dynamics that has to be stopped. So I think the length and the volume will actually address the issue that you're referring to.
Thank you very much. Now, Caroline Nachtigall for Renew.
Yes, thank you, Chair, and also thank you, Mrs. Lagarde. And I think TPI is a very hot topic, so I would like to continue with that as well. And I think it's correct that the ECB mentioned the TPI tool only to treat it as a last resort. And indeed, buying debt of heavily indebted countries could encourage their... Oh, sorry.
Caroline, sorry, we cannot hear you very well. If you don't mind talking more in the closer to the microphone.
Is it better like now? Is it better?
Oh, now, yes.
No.
Yes.
It's strange. Okay. So again, thank you, Chair, and thank you, Ms. Lagarde, as well. The TPI is, I guess, a very hot topic, referring to the other question. So. And I think the ECB mentioned it correctly to say only treat it as a last resort. And indeed, buying debt of, let's say, heavily indebted countries could encourage their governments to take on even more debt, since they know that the TPI would protect their country. So I was wondering, with regard to these developments, could you please reflect on the use of the TPI in relation to the Italian elections yesterday? I'm very looking forward to hear your view on that. Thank you.
I'm afraid you might be disappointed, because TPI is not intended for any specific country that any of us would have in mind. It is intended for all countries, because the rationale for the TPI is proper transmission of monetary policy to all countries that are members of the euro area. So it goes from the Baltic countries all the way down to Malta, including Croatia and everything in between. Well, Croatia as of the 1st of January. But, you know, I don't have a specific country in mind. I just want to also remind you that this is not the instrument. We have a variety of tools that we use. We have used in the course of July, because the numbers have now been published, flexibility in the reinvestment policy of the pandemic emergency program for the redemption that were coming due, and that has been an effective and proportionate tool under the circumstances. But I would not apply the TPI mechanism process that I have just described with the 3 steps, nor the criteria to any particular country. I will just maybe mention and remind you of the criteria, which maybe will help you assess for your own purposes. There are 4 criteria. The first one is compliance with the EU fiscal framework. The second is the absence of severe macroeconomic imbalances. The third one is fiscal sustainability. And the fourth one is sound and sustainable macroeconomic policies. So you see that as opposed to other tools that we have in the toolbox, such as, for instance, OMT, this aims at a different set of situations than something like OMT would apply. It's a situation where essentially things are going on track and in accordance with the rules and in respect of the fiscal framework and in compliance with fiscal sustainability, and where there are unwarranted, disorderly market dynamics which are not justified by fundamentals or by economic policy errors that would have been made. Those are more relevant to the OMT than to the transmission protection instrument. Thank you.
Yes, thank you so much, and thank you for elaborating on this important topic. A short other question from my side, and I would like to refer to the national central banks across the Eurozone, and we see that they have been struggling with losses due to the rising interest rates. Also, Klaus Knot mentioned it in the Netherlands, and I was wondering to what extent do you, Ms. Lagarde, consider this is a problem, especially in relation to reduced streams of revenue that national governments faces as a consequence? Could you reflect on that? Thank you.
Sure. You know, national central banks that are part of the euro system do not have as a purpose to generate profit. Their purpose, and the only purpose that has to drive all of us in the euro system, is price stability. And this is really what we are targeting, what we are angling, and where we are spending all our efforts. It does have consequences, but the decisions that we made and that we will continue making will be riveted to that compass, which is price stability. We have to fight inflation, we have to deliver for the European citizens, and we have defined price stability as 2% in the medium term, symmetric, and we will deliver. So, yes, there will be consequences of, you know, different sorts, but the purpose is price stability. Thank you.
Thank you very much. Now I give the floor to Rasmus Andresen for the Greens. One question, 1 minute and a half.
President Lagarde, good to have you back in the committee. I'm here. I think we are all concerned about the current economic situation with record high energy and food prices. They are making the life for a lot of people terrible. But I think we should be very clear that rate hikes will not bring down the energy prices. Rate hikes will not bring down food prices. Rate hikes will not bring down monopolies, which allows enormous profits for big corporations. And rate hikes will not convince Putin about ending this this war. The tools you as a central bank have, President Lagarde, to fight this crisis on a short-term level are quite limited, and this is why we are a bit puzzled that you are targeting short-term fluctuations of inflation instead of looking at medium-term inflation to guide its policy actions. According to your own inflation forecast, and we received it once again, as well as market inflation expectations, inflation will fall rapidly already in 2023 and converge to 2.3% in 2024, which is only slightly above the symmetrical target of 2%. So my question goes on, why do you anticipate further interest rate hikes if your own forecast points to inflation being back close to the target in the medium term?
Thank you very much, Mr. Anderson, for your question. In a way, you've already providing the answers to your question in the way you formulated it. Our objective is 2%, not close to or below, or no, not close to or above. It's 2%, symmetric in the medium term. And if I look at the projections produced by our staff in terms of inflation outlook in the medium term, we are not at 2%. If I look at the baseline scenario, some of the hypotheses of which are already overridden by the turn of events, and I'm here referring to the complete shutdown of gas from Nord Stream 1. If I look at that one, we are at 2.3% in 24. Now, you could argue that this is not exactly the medium term, but this is the last year of our projections, and we have to take that year into account, certainly. Well, it's not 2%. Now, if I look at something else that was produced by staff that maybe some of you have looked at, which is the downside scenario, where things really don't go well, the inflation projection for that one in 24 is 2.7%, even further away from our target. So it's not as if I was looking at benign numbers. There are numbers that are both in the baseline, slightly overridden by events, and certainly in the downside scenario, way above our 2% target. And that in and of itself requires that we take action, especially when you have most recent readings as high as 9%, and in some countries as high as 20%, like in the Baltic states. So we do have to take action for two reasons. One is because we need to bring inflation down by two factors. One is demand, and second, inflation expectations. And it's by acting on these two accounts that we hope to bring inflation down in the medium term. Where you are right, Mr. Anderson, is in relation to what I can do about Mr. Putin's unjustified and horrible actions. I cannot stop that. I wish I could, but I can't. Where you are right is that I cannot bring the price of gas down. I wish I could, but I can't. Maybe a good reform in the electricity price setting would help more. This is not for me to do. I wish I could. Thank you.
Thanks for the answer. I understand from your initial presentation that your projections actually still are expecting economic growth for next year. But a lot of banks, for example, like the German Bundesbank or Banque de France, are actually expecting that we are going into a recession. And evidence actually is suggesting that where an energy price shock is followed up by a recession, this is usually due to overshooting of monetary policy. And there are already some economists pointing out that the first decisions you made in the last months were the right ones to take, but that you're overreacting now. So I would like to ask you if you see a risk of overreacting in the decisions you are also planning to make in the coming weeks, and what kind of measures you are taking to ensure that this is not happening.
2 points briefly. On the first one, we are projecting positive growth next year in the baseline scenario, of which I have just said that some elements have been overridden by events. Just to give you an example, 20% supply of gas through Nord Stream 1 has now been shut off. It was when we, there's a point in time when we say, okay, we stop, we measure, and staff provides us with projections. Prior to that cut-off date, there was no reason to believe that it would go down. It has gone down since. Because of the uncertainty that we are living through, staff has also produced the downside scenario. And in the downside scenario, some of the hypotheticals of which have become reality, we have recession. We have minus 0.9% as opposed to plus 0.9%. So our estimate, my estimate this time, not staff, because staff is giving us the two, the baseline and the downside, is that we're probably somewhere in between. And obviously we will know more in December when staff produces yet another projection for the activity. Your second point is overreaction. Look, what we decided to do over the last two monetary policy meetings that we had of the Governing Council was to increase by a total of 125 basis points. 50 first, 75 at the next meeting. We decided deliberately to front-load our monetary policy response. And we also indicated that there would be more interest rate hikes in the next several meetings. Because what we want to do is to arrive at the point where monetary policy is neither stimulating nor tightening, that economists call the neutral rate. We are not there. When we get there, we have to determine whether we reach our target of 2% in the medium term. And if we don't, then we might have to take further measures. Thank you.
Thank you very much. Now the next speaker, Gunnar Beck for ID. 1.5 minutes for the first question.
Thank you, Chair. Good afternoon, President Lagarde. For the last 8 years, your predecessor and you have been inflating the money supply. The results are dismal. At 9.5% in August, the Eurozone has the highest inflation in the OECD except for the UK. In China, inflation is 2.5%, in Japan 3%, in Taiwan 2.7%, in South Korea 5.7%, in Australia 6%, and in the US 8.3%. Inflation in the Eurozone is now even higher, is now higher than even in traditional high inflation countries such as Brazil, India and South Africa. The Eurozone's growth projections are also amongst the very worst of the developed world. So while all countries are affected by rising energy prices, Europe is performing dismally and worse. So when I'm asking, are you finally abandoning the disastrous monetary policy of your predecessor? Because all the ECB is doing is bankrolling disastrous climate and migration policies which cost us hundreds of billions every year and catapult us into economic significance. Thank you.
Thank you, Mr. Beck. Let me first of all correct a little bit some of the numbers that you've mentioned. And remind you where we were back in December, a year and a half ago. In terms of numbers, I would simply like to I will just take one number, which will take you to a second part of my response. Let's look at core inflation. So you take out energy, you take out food, which is where people feel most acutely the inflation. But you take this out. Where is the euro area? 4.3%. Where is the US? 6.3%. So to argue that Europe is doing abysmally poorly compared with all OECD countries except one or two, I think is a little bit of an exaggeration. That's point number one. Now, why did I take out energy and food? Because our continent and many economies have been facing unprecedented shocks that have generated massive inflation. 18 months ago, inflation was in negative territory, and we were fearing deflation. But we have forgotten that. December 2020, inflation was in negative territory. And the latest reading of August was 9.1. So it has increased massively in a short period of time because of two unprecedented shocks that have been compounded by unexpected outcome. Pandemic first, massive recovery as a follow-up of the right measures that were taken in order to avoid a financial meltdown that we would have had on our hands. And the second unprecedented shock is the energy shock that has been nicely prepared before February 22 and massively amplified since the invasion of Ukraine. So inflation has not been caused by monetary policy. If you look at what has happened since December 2020, it's this massive rise caused by the unprecedented shocks that have combined to give us the inflation that we have today. Now, monetary policy must act against inflation. There is no question in our mind, there is no question on my mind, that we have to act as much as we can in order to reduce inflation in the medium term. Thank you.
Follow-up of 1 minute.
Yes, thank you. I hear what you say, and I hear your reference to unprecedented shocks. The only trouble is that we've been hearing this for many years now. So why is it always Europe that's suffering these unprecedented shocks? And there's another point I'd like to raise. Somewhere I saw that energy, the energy component of the HCPI, is only 10%. Is that not a... my question here is that correct, or has it been updated? Because if not, it's a grotesque understatement of the overall cost of living contribution of energy price rises to our citizens.
Thank you so much. And regrettably, we've all fallen prey to this COVID virus. It's not specific to the euro area, and it has not limited its damage to the euro area. So all of us have been a victim of that, unfortunately. And it is true, you're right, that Europe is certainly more of a victim of the energy crisis for reasons that have to do with the energy supply that we have, with the resources that are available, and with the dependency in which we have, deliberately or not, found ourselves in the current circumstances. But on the contribution of energy, I just want to set the record straight. We look at the HICP, which is the headline inflation, that incorporates the impact of energy and food. And on that one, I can assure you that it's more than 50% of the HICP that is a direct result of energy prices. Energy prices in and of themselves have, as I said just earlier on, increased by nearly 40% from one year to the other. And it is representing more than 50% of total price increases. And of a huge magnitude, it is now also spreading across other sectors. Thank you.
Thank you. Thank you very much. Now I give the floor to Johan van Overveld for ECR. 1 minute and a half for the first question.
Thank you, Chair. Good afternoon, President Lagarde. I'll squeeze two questions in the first 1 minute and a half. You hear now more regularly or increasingly the argument that in order to contain this inflation we need positive real interest rates. Can't you hear me? My mic is on. Okay, please adjust my time. Okay, I'll start again. You increasingly hear the argument that in order to contain this inflation, we will need real positive policy interest rates. If you only look at core inflation, that would mean 5-6% inflation rate for the euro area. Do you agree with that statement or that kind of argument? And is the neutral rate you regularly talk about in accordance with this kind of argument? My second point is a point that I already raised earlier with you on the impact of the declining euro exchange rate vis-à-vis the dollar. Last time you said, well, the euro is more or less stable vis-à-vis a basket of currencies, but of course our import prices are not in a basket of currencies. They are to a very large extent in dollars. And so a decline of the euro vis-à-vis the dollar increases our import prices and increases inflation. Aren't we there in a kind of inflationary doom loop due to that decline in the euro exchange rate? Thank you.
Thank you, Mr. van der Overtveld. And a couple of points in response to your first question. I don't know what the exact rate will be, but I can assure you that the Governing Council is determined to reach that point which economists call the neutral interest rate point, which is where monetary policy is neither stimulating nor tightening the economy. Second, we will decide meeting by meeting because of the level of uncertainty that we have. And third, we will decide on the basis of the data that is presented to us for the current situation and the outlook. And we will look at empirical data, we would look at model-generated data in order to make sure that we reach our medium-term target of 2%. Second point, as we speak now, and with the interest rate hikes that were decided over the last two monetary policy meetings, we are still in an accommodative monetary policy mode. And we have to move to that point that we call the neutral rate, where we are not stimulating the economy anymore. A lot of this inflation is caused by supply. If we have this supply wall and we stimulate demand by being accommodative, we are simply going to push inflation up, which is why we need to decisively move to the neutral rate that you referred to. Your second question had to do with the significant appreciation of the dollar relative to pretty much all currencies, including the euro. And that is something that obviously we monitor very carefully because it does have an impact on inflation, and we have to assess this aspect. Luckily, countries of the euro area trade a lot amongst themselves. About 60% of our trade is in euros as opposed to in dollars, in volume. Now, where clearly it has a higher impact at the moment is that the price of energy, particularly oil and gas, is determined in US dollars. Therefore, the appreciation of the dollar relative to all currencies has a higher impact on those particular two accounts. Thank you.
1 minute for the follow-up.
Thank you. The interest rate increases that we see now all over the place, pushed through by central banks, are of course having a substantial impact on financial markets. We see that in different directions. My question is, how about the shadow banking system, which has become very important and where we don't hear a lot about what the impact of these interest rate increases is. And I cannot but imagine that that impact is substantial, maybe not yet visible, but certainly to come. What's your assessment of that situation?
Well, the interest rate decisions that are made by central banks obviously have an impact on markets, and markets tend to actually anticipate what they assume central banks are going to produce in terms of monetary policy decisions. So very often when the decisions are made, it's already priced into the markets. And as a result, whether it's the banking system or the shadow banking system, actually take those into account in order to determine their own financing cost and the cost at which they offer financing to third parties.
Thank you very much. Now I give the floor to Chris McManus for the left.
Thank you, Chair, and good afternoon, President Lagarde. As we're all very aware, it's a very worrying time for workers, for families, for small businesses and for farmers across Europe, and each interest rate rise brings renewed fears and anxieties, and amongst the bills people are struggling to pay is the mortgage bill. Mortgage rates in Ireland are still considered extremely high, even though we have thankfully seen a small drop in some cases in the last while. This is a bill that your decisions have a very direct impact upon. For many, a mortgage rate increase will be the straw that can financially break the camel's back for them. And then there's a spiral of interest accumulation and arrears which become then unavoidable. Now we're facing a situation where we have a very concentrated and very uncompetitive banking system in Ireland, existing high mortgage rates and an ECB interest rate that's only going probably in one direction for the foreseeable future, which means that we have almost a perfect storm for mortgage holders. So my question is, apart from where the contract may specifically say otherwise, for example, a tracker mortgage, can you confirm or clarify that the decision to change interest rates on mortgages, it's ultimately a commercial decision for each bank and is not a requirement as the ECB rate changes? Thank you.
Yeah, thank you very much for your questions. And let me assure you that we are well aware that those decisions that we make on interest rates in order to fight inflation have an impact on those who borrow and those who lend. And obviously those who borrow on mortgage, depending on the terms of their lending conditions, take a hit as a result. You know, we are dealing with different circumstances throughout Europe. There are countries such as, for instance, the Baltic countries or Finland, where interest rates are variable and where mortgage payments actually go up significantly. And there are countries like the one that you referred to, where by virtue of the pricing mechanism, fees and mortgages payment are high as well. And those matters have to be dealt with at the national level, either by macroprudential decisions that are made or by commercial decisions that are made by those who offer mortgages. But it is not in and of itself only as a result of the interest rate hikes that are necessary in order to fight inflation that those conditions are specifically difficult in the country that you referred to. Thank you.
Thank you very much for that, President Lagarde, for your comments. And just to follow up then, could I ask and I'm going to refer back to Ireland again, it's obviously a market that I know well, but where we have profitable banks in very uncompetitive small markets like Ireland, are there measures that can be taken either at the European level or the member state level, but are there measures that can be taken to ensure that the mortgage banks are not simply passing on any ECB increases to homeowners without any commercial justification?
I'd say two things. One is, in most euro area countries, there are consumer protection agencies that should certainly be acting in such circumstances. And number two, but I will sound like a broken record to you, if we had complete banking union, I think these matters would be more easily addressed. And I have to salute on that basis the work done by another famous Irish gentleman, Pascal Donoghue, who has been fighting like crazy in order to make sure that banking union happens. And it hasn't yet happened. It's operating on a piecemeal basis. Hopefully he will be successful on that narrow angle that has now been taken, but a comprehensive banking union would certainly go a long way in addressing those matters on a European-wide basis.
Thank you very much. Now we start our second round of questions. So just let me remind all of you, in this second round, each MEP has 1 minute for the question, and then President Lagarde has 3 minutes for the answer. Let's start with Livia Pereira for the EPP.
Muito obrigada, Presidente. I was going to say that I was going to proceed in Portuguese and I started in Portuguese, but I will speak in Portuguese. Senhora Presidente, a inflação na zona euro está em máximos históricos, mas pode ser também aqui a ponta do iceberg, porque os juros dos empréstimos que os europeus conseguem ouvir-me bem? No, you can, okay. Okay, now maybe it's good to go. Thank you very much, Chair. I will proceed in Portuguese now. Senhora Presidente, a inflação na zona euro está em máximos históricos, mas pode ser também aqui a ponta do iceberg. Os juros dos empréstimos que os europeus estão a pagar começam a bater recordes e as famílias veem, por isso, a prestação da casa a aumentar como nunca. E, portanto, eu gostava de lhe perguntar como é que avalia o impacto da política de juros do Banco Central Europeu no rendimento das famílias e o que é que antecipa para os próximos meses. Já tivemos aqui algumas informações da apresentação que fez, mas gostava de ouvi-la mais profundamente sobre este tema. E o que é que o Banco Central Europeu pode fazer para atenuar as consequências que muitas famílias, nomeadamente com o pagamento, com a subida da prestação da casa, estão a enfrentar. E pergunto-lhe porque estamos perante um coquetel explosivo. Apesar das projeções do Banco Central, parece que 2023 vai ser um ano de recessão e por isso pergunto também se há margem para continuar a aumentar as taxas de juros num contexto ou num cenário de recessão. Obrigada.
Thank you very much. On your first question, as I said, we are very aware that mortgage payments are higher as a result of interest rate increases. But this is what monetary policy like the ECB has to do. We have to contribute to stability by trying to fight inflation. And the best way to fight inflation in the present circumstances is to use the interest rates. So we have to do that. And, obviously it's for fiscal authorities to look at the most vulnerable, the most exposed citizens in order to tailor those support programs that will be put in place in order to help. Will 23 be a year of recession? Future will tell. And as I said, in the baseline scenario, our staff projection still assumes that 23 will be positive by 0.9%. But in the downside scenario, some of the element of which have already come to pass, it will be a recession of 0.9%. And obviously, given the level of uncertainty that we are facing and the uncertainty about the fiscal response that will be given by some countries, it's difficult to predict what the real outcome will be in 23. But it will be certainly a difficult year, of which the first quarter will most likely be negative, as we believe that the fourth quarter of 22 will be negative as well. And it is one where we have to continue to fight inflation, because this is the mission of the central bank to maintain price stability. And I think that by maintaining price stability, we contribute to better economic circumstances by eliminating risk premia, by restoring confidence, and by giving the certainty to people that the central bank means doing what it has to do, which is to bring stability back. Thank you.
Thank you very much. Margarida Marques, S&D.
Merci, Mesdames les Présidentes. I move to English. The new ECB anti-fragmentation tool is now linked with the EU fiscal rules, and its activation requires sustainable economic policies from the Member States and compliance with the EU fiscal framework, in a moment when the general escape clause is activated. Can you develop how this process works and timetable? Specifically when the Member States is suddenly affected by a rise in bond yields. Is the ECB who is going to evaluate the fundamentals and macroeconomic policies of the Member States, even if this is outside its mandate? Or the ECB will follow the assessment of other institutions, like the Commission, for example, and this given the fact that is the ECB who has the last word on activating or not the anti-fragmentation tool. Thank you.
Well, thank you. Thank you very much for your question, and thank you for paying very close attention to the 4 criteria that I have mentioned earlier on, one of which is the compliance with the EU fiscal framework. And obviously we are currently in a situation where, by virtue of the escape clause, the fiscal framework is suspended in many ways. Now, I take some reassurance from the fact that the Commission is due to propose the terms of the new fiscal framework in reasonably short order. I heard that October might be a month when we see the first draft, and that would be good, certainly, and we shall be consulted on this aspect, and we have already, as ECB and Eurosystem, given an opinion on what we believe would be the appropriate key points in this new fiscal framework. In the meantime, we have to rely on the assessments that are made by the relevant authorities. So we will obviously look very attentively to what the Commission is saying, to what the European Stability Mechanism is saying, and to institutions that have the tradition and the authority to evaluate macroeconomic policies, structural reforms, and so on and so forth. But at the end of the day, it is for the Governing Council to pass a judgment as to whether or not the use of the TPI is warranted. So it will be informed by others' valuable assessment, but it will make its own decision and will come to its final judgment by itself. Thank you.
Thank you very much. Now, Ludek Niedermayer for the EPP.
Thank you very much and welcome here, Madam President. I am surprised that, shouldn't there be actually someone from Renew now?
No, there's no one in the list.
Okay. So I'm surprised that we are not talking more about price stability because this should be the topic of the day. So let me go to that. Let me sum up what was said so far. So inflation is very high. We know that. As Madam President rightly said, part of that is demand inflation. Significant part of that is the demand inflation. The third, expectations will likely go up. And last not least, policy rates are below neutral level, as you said. In my view, it's strange to say that you are front-loading monetary policy. As a former central banker, I can say that it fits perfectly to the description of central bank being behind the curve. So that means doing too little, too late. And this is not a criticism because the situation was extremely challenging. But I guess it's it's fact stating that we are behind the curve. So that's why we have proven this FX rate depreciation. So the question is, what lesson we should learn from that to not repeat it again and make sure that next time we will perform better?
Thank you very much for your question. I hope that next time we don't have the unprecedented shocks that I have just mentioned, which are fueling supply-driven inflation, not demand-driven inflation. This is really how we analyze the root cause of inflation. It's largely and predominantly supply. It's not only supply, but it is largely supply-driven, largely. And thank you for recognizing the difficulty of the circumstances. And let me also remind you and colleagues that we haven't woken up in July. This normalization of monetary policy that I alluded to, we started it in December. And we decided to stop net asset purchases. We decided to put an end to the pandemic emergency purchase program. And once those two steps were taken, to put behind us the negative interest rates by raising our monetary policy 3 rates by 50 basis points. And the front-loading element came yet again at the last monetary policy meeting that we have had when we decided to increase all 3 interest rates by 75 basis points, which was also unprecedented. Took place once, I think, but that was a very technical decision at the time. So are we behind the curve? Are we not behind the curve? What I want to say is that it's a journey that started back in December, that there is more to come, and there will be more interest rate hikes until such time when we get to the neutral rate, at which point we will determine on the basis of outlook and on the basis of the then circumstances whether or not we need to go higher in order to reach our target of 2% in the medium term. It's very clear to me what journey we need to travel. Thank you.
Thank you very much. Now Joachim Schuster for SD.
Ja, vielen Dank. Ich werde auf Deutsch reden. Sie hatten gerade betont, dass ein erheblicher Teil der so hohen Inflation eben nicht durch monetäre Ursachen verursacht ist. Insofern auch nicht mit der Geldpolitik in dem Sinne bekämpft werden kann. Gleichzeitig besteht ja die Gefahr, dass steigende Zinsen gerade in der jetzigen Phase zusätzlich die wirtschaftlich zu erwartende Rezession verstärken werden. Angesichts der durchaus größeren Unterschiede der Betroffenheit der Volkswirtschaften der verschiedenen Mitgliedstaaten ist dann allerdings auch nicht ausgeschlossen, dass wir kurz vor einer Eurokrise stehen, und zwar vor einer tieferen Eurokrise, als wir das 2010 bis 2012 hatten. So, für mich kommt daraus die Schlussfolgerung, eigentlich bräuchten wir eine konzertierte Aktion der Geldpolitik mit der Finanz- und Wirtschaftspolitiken der EU und auch der Mitgliedstaaten, die wir ja institutionell nicht haben. Deswegen ist also für mich die Frage, wie wollen Sie eigentlich eine hinreichende Flexibilität der Geldpolitik in diesem Kontext dann gewährleisten, um im Zweifelsfall Fehlentwicklungen zu korrigieren? Und was tun Sie, um wenigstens ein Minimum an Abstimmung mit den Finanzpolitiken hinzukriegen? Weil ohne das wird man diese Lage nicht bekämpfen können.
Well, thank you very much for your question. And let me just really clarify how we see the situation. We have very high inflation numbers. Our inflation outlook at the end of our projection horizon is above our target of 2%, which is the rate that we have defined as delivering price stability. The source of inflation is, as I think I tried to indicate earlier on, predominantly supply-driven, and energy prices have played a significant role in that respect. The monetary policy that we have at the moment is still, and obviously a fortiori was still accommodative, and was pushing up demand. So if we have a supply-driven inflation on the one hand, And if we are pushing up demand with accommodative monetary policy, what will be the result? Inflation will go higher. So for me, it's obvious that we have to take those measures and stop pushing up demand and make sure that supply and demand realign as a result of the action that we are taking, and hopefully as a result of action taken by others. And that's where I come to your second issue, which has to do with coordination. I would say that first and foremost, any structural reforms, any action that is taken by governments and by other European institutions in order to address the disorder in the energy markets that drive energy prices where they are would certainly help a great deal. And second, obviously, fiscal policy has to be tailored in such a way that its action targets the most exposed and most vulnerable, that these measures are temporary and can be removed when the situation is restored, and that on the top of it, if there is the fiscal space to do so, that member states continue to invest in particular in the green energy programs that they had committed under the recovery and resilience plans that they submitted. So that's really the situation as I see it. Thank you.
Thank you very much. Now, Ernesto Urtasun for the Greens.
Thank you, Madam Lagarde, for being with us this afternoon. A very quick question. Well, you have mentioned it yourself, the decisions to raise interest rates will have a difficult impact for family households. Mortgages will be more expensive, credit consumer will be more expensive. And on the other hand, in the last years, you have been providing subsidized loans to banking through the telcos with an interest rate as low as -1%. Now, what was surprising to see from the last decisions is that now you will allow the banks actually to park those reserves into the deposits of the ECB that will be remunerated at the new interest rate, which for us it's rather a taxpayer-subsidized carry trade. So, and actually we are already seeing how the banks are moving those reserves into the deposits of the ECB, actually to collect the arbitrage profits. So my question would be, what is the economic rationale for allowing the banks to do that? And secondly, if you have calculated the distributional effects that process will have. Thank you.
Thank you very much for your question. Let me first of all remind ourselves of the economic rationale why we had put in place some refinancing schemes that were a clear incentive for banks to invest in the economy and to finance the economy. When that was put in place and gradually increased over the course of the pandemic, that was intended to encourage banks to not slow down, reduce, and possibly stop the financing of the economy. And at that juncture, it was critically important to provide the financing incentives that led banks to effectively lend to the economy. You remember that one of the conditions to be eligible to those favourable interest refinancing, this refinancing cost, was at least the same support to the economy as was available before COVID. So that was the purpose of the refinancing schemes that we put in place. And the first priority was really to provide the security and the reassurance, which means increasing the visibility that economic actors had over their future. And we did at the time conduct the proportionality assessment and the effectiveness assessment that we have to apply to each monetary policy decision that we make. Now, having said that, we need to ensure that the policies that we apply always remain proportionate. And clearly we are studying the overall situation of reserve remuneration, all reserve remuneration, having TLTRO also in mind. We need to make sure that the balance between costs and benefits of that side of our policies remain positive. We will be looking at those issues, and obviously we will keep you updated of those deliberations. But we need to look at the reserve remuneration conditions. Yes. Thank you.
Thank you very much. Now, France Jamy for ID.
Oui, bonjour, bonjour Madame Lagarde. Je crois qu'il n'est pas nécessaire aujourd'hui ici de rappeler que votre mandat consiste à maîtriser le montant de la dette et maîtriser le montant du crédit pour assurer une monnaie stable et durable. Tôt ou tard, les dettes doivent être payées au risque de perdre notre crédibilité et détruire la valeur de la monnaie. Je crois que tout le monde l'a relevé ici. Les premières victimes seront les plus modestes, les plus vulnérables et nos TPE et nos PME. Vous avez parlé tout à l'heure, tout le monde en a parlé, vous avez parlé de contenir la demande, je crois que tout le monde a bien compris, récession. Et vous voyez, par exemple, intégrer une politique verte dans la politique de la BCE est totalement inflationniste, puisque cela consiste à renchérir le coût des activités économiques et des activités de services, et plus particulièrement industrielles et logistiques, mais surtout, ce n'est pas le rôle d'une banque centrale. Alors l'inflation et la crise économique, fruit de la politique de création de monétaire débridée depuis 10 ans et de choix, pourquoi ne pas le dire, et d'erreurs politiques, sont bien là pour durer et s'aggraver. Madame Lagarde, vous avez parlé tout à l'heure, effectivement, l'incertitude, qui n'est pas un vain mot, mais je voudrais vous demander, est-ce que la BCE entend enfin remplir pleinement son mandat, à savoir assurer la stabilité de la monnaie pour le bien des épargnants et pour le bien à long terme de notre activité économique. Je vous remercie.
Merci, Madame. I think I'll answer the question in English unless it's okay. Bon, c'est un plaisir de parler un peu français, mais je crois que c'est au moins je suis sûre de ma traduction. Donc, so. There should be no doubt in anybody's mind in this Assembly and beyond that our mandate, our primary mandate, the one that really is operating as the compass of all our actions, is price stability. That is the primary mandate. And we will act upon that mandate. We have started that journey back in December. We are going to continue, and that has been announced at the last monetary policy meeting that we had. And our destination is very clear. It is such interest rate that will deliver inflation at 2% in the medium term. Having said that, there are secondary objectives as well that are very important and that must be looked at, delivered upon, as long as it is without prejudice to the primary mandate of price stability. So to describe it, between two options of the secondary mandate, if one is without prejudice to the primary mandate, it will be perfectly acceptable. If it does prejudice the primary mandate, it will not be acceptable. We believe at the ECB and within the whole Eurosystem, so all national central banks have signed up to that, that climate change imperatives are part of our monetary policy strategy. Why is that? Because as we have seen, climate change has a direct impact on inflation and on price levels. I'll give you one example. The Rhine River went down significantly over the course of the summer. A lot of the barges that travel on the Rhine were only half full, and some of them couldn't even travel down the Rhine because it was so low. Well, that clearly has an impact on prices, and it's what we otherwise call a supply bottleneck. We cannot transport the grain, we cannot transport the coal or whatever it is that is shipped on those barges at the same speed and in the same amount. That's only a minor example. If you take drought into account, if you take famines into account in various corners of the world, it does have an impact on price levels and price setting. So from that angle, it has to be taken into account. For another set of reasons, it matters, and it is risk management. If we hold in a balance sheet of any of our national central banks or the European Central Bank. And for that matter, the commercial banks with which the national central banks operate, risks that are not properly valued and accounted for, that's an issue for those to which the banks are accountable, which is the general public in the case of the ECB or the national central banks. And it requires that we take that into account, which is why, as I mentioned in my introductory remarks, as of next Monday, we will be tilting our corporate portfolio in our reinvestment decision in order to better account for the climate change-related risks, the level of disclosures by corporates, in order to satisfy the secondary objective, which is what all European institutions are pursuing, without prejudice to our primary.
Thank you very much. Eugene Jurzika, ECR.
Thank you very much for the floor. Madame Lagarde, a lot has been said about the interest rates today, but the central bank also has other means to limit the spread of the inflationary fire. Fed Chairman Powell recently committed Fed to shrink its balance sheet to withdraw some of the money supply from the economy. In the meantime, after the mild decline, ECB's balance sheet has risen again in September compared to August. Madame Lagarde, is the ECB prepared to follow Fed's example and start shrinking its balance sheet as well? Thank you.
Thank you very much for your question. On the issue of reinvestment, this is the only area where we still have forward guidance in our monetary policy stance. And there is very clear guidance on both the asset purchase programme and on the pandemic emergency programme. And those elements of forward guidance remain valid for the time being. At present, what we believe is going to be the most efficient, most effective, most proportionate decision and tool is the rates. Hiking interest rates, as we have and will continue to do, is the most proportionate, effective and efficient way of dealing with the inflation that we are seeing and in dealing with reaching our objective of 2% in the medium term. So that is, I can remind you, stance. It's in our monetary policy statement each and every time. And so far, this is still the guidance. On PEP, it's until at least the end of 2024. And in any case, the future roll-off of the PEP portfolio will be managed to avoid interference with the appropriate monetary policy. At the moment, now, when we have completed our monetary policy normalisation using the most appropriate, efficient and effective tool that are the interest rates, then we will ask ourselves, how, when, at which rhythm, at which pace we use the other monetary tools that we have available, including quantitative tightening as a result. But that will take place in due course, in due time, once we are completing the normalisation process and exhausting the benefit of what we regard as the most appropriate tool at the moment. Thank you.
Thank you very much. Now another slot for EPP with Ludwig Niedermayer.
Yes, thank you. I have Danuta Hübner's question, but let me rephrase it and continue with our last exchange. I must say that I don't share that perception of supply inflation, because supply can cause high inflation only if there is sufficient demand to finance the price hike. Otherwise, the price hike of some items will be compensated by deflation of the others. So that's why I really insist that there is substantial demand side inflation. And this is important for my question, because in future, and I guess this is what is reflected by your alternative, more negative forecast, what we can experience is that high inflation will persist and real income will drop. As the consequence of that, there will be a recession. And Danuta question is how ECB would be able to assess the moment where there is really appropriate to move from tightening or to neutral stance to monetary policy to more accommodative stage in order to be able to basically reflect in monetary policy the recession caused by decline of real income. Thank you.
Thank you very much for your follow-up question. Where I agree with you and disagree with you at the same time is that I don't think that the source of inflation is purely supply, nor do I think that the source of inflation is purely demand. And I continue to believe that there is a much stronger element of supply drivers than there is of demand drivers. But there has been some demand element about it. I mean, when we all looked at the strength of the recovery post-COVID lockdown, for instance, there was an element of demand that was pushing up. But that was largely pent-up demand. And pent-up demand takes its course and then gradually fades away. How much time exactly does it take? To be seen, but we are beginning to see, for instance, that the high demand in services that really steamed, particularly during the summer period, is gradually coming down. We have to be very prudent, let's face it, because just as we all assume that supply bottlenecks would fade out, as they should fade out in economic theories, well, it took longer than anybody had expected. Now those supply bottlenecks are gradually easing, and of containers traveling from China to Europe or from China to Los Angeles. We are seeing it in the delivery time reduction. But those time frames are certainly not what was in the textbook. And the demand-led the recovery-led demand aspect of the drivers of inflation is also something that we need to really understand better and explore at length and in depth, because we are facing unprecedented shocks, we are facing an unprecedented situation, and our reaction function must take all that into account. Now, for the moment, let's do what we have to do, which is to reduce inflation, bring it down to the targets that we have in the medium term, target of 2%, and then we'll see what comes next. But for the moment, we are riveted to what we have to do. Thank you.
Thank you very much. Now we have two requests for Catch the Eye. The first one from Dorian Rookmaker for ECR. 1 minute for the question, 2 minutes for the answer.
Thank you so much. Thank you, Mrs. Lagarde, for coming here. I have only one short question. If the TPI instrument doesn't work or doesn't work enough, is ECB now already considering the option of a temporarily opt-out the Eurozone for countries in trouble? Thank you.
Thank you for your question, but first of all, I would hope that the various instruments that we are already using, such as the flexibility in reinvestment, or that we would determine is necessary and appropriate, such as TPI, will not lead us to that conclusion. But if it was the case that the use of TPI is not successful, then we have other tools available in the toolbox, and one of them is clearly OMT, which has some ex post conditionalities about it that are intended to address the policies that must be adopted by the country. But there is no sort of opting out that could be decided by the ECB. No.
Thank you very much. Now the second request from Michael Hugefen is yours.
Thank you, Chair, and thank you, President Lagarde, for being here. In response to widening of the bond spreads at your first interest rate hike this year, you created the TPI in order to ease markets. And in addition, the ECB conducted debt mutualization via the ECB balance sheet through the pandemic emergency purchase program reinvestments. As a result, spreads remained somewhat narrow after your last interest rate hike. In other words, it would be seen as something positive, but I would see it in a way that the ECB dulled market signals and incentives without replacing them with any credible conditionalities. You spoke about the conditionalities on the TPI, these 4 criteria, but these are mere input for the ECB Governing Council to decide upon. So I don't really see them as credible, concrete conditionalities. So my question is, if the ECB would stop intervening in the market, the states supported by your instruments will face a fiscal crisis. As the ECB will want to avoid a sovereign debt restructuring or a member state leaving the Eurozone, the ECB will be trapped into continuing support. My questions, do you agree that your tools are disrupting the financial markets? And second, the lack of conditionality of the ECB tools creates the risk that the ECB is now funding fiscally irresponsible policies of highly indebted Eurozone member states. Thank you so much.
Thank you very much, but I'm afraid I disagree with you. I disagree with you because the transmission protection instrument is precisely designed in order to deal with unwarranted, disorderly market dynamics. So it's not the TPI that is causing a disruption. It is because there is an unwarranted, disorderly functioning of markets that the TPI was actually designed. And second, as I just said, the decision by the Governing Council, which is a decision in its own judgment, will be based, if it has to take place, on the basis of this 3-step process and the 4 criterias. And the 4 criterias are pretty strict and rigid criterias, with the caveat of the escape clause, which is not going to last forever, obviously. But they are pretty strict criterias of essentially dealing with a country that is in compliance with its obligations under the treaties and the various mechanisms. And third, if we were to face a situation where all that doesn't work and we have a misguided judgment, we Governing Council, then certainly the next step would be the OMT. And that includes conditionalities that I would call ex post conditionalities that a country has to satisfy in order to be eligible. Thank you.
Okay, thank you very much. I have no further requests for Catch the Eye, so I really want to thank President Lagarde for her availability and thank all the MEPs who participated to this dialogue. Our next item in agenda starts at 5, so we will take a short break and resume in 15 minutes at 5 o'clock. See you later.